Hello, good morning. JA Del Rio appreciates your participation and welcomes you to the webinar, Doing Business in Mexico. And well, it is my pleasure to introduce Cynthia Ñañez and Arnoldo Rodriguez, both tax directors in JA Del Rio. They are in our Monterrey office and have many years of experience advising national and international companies in sectors such as automotive, manufacturing, commercial, among others.
Thank you, Ale.
Hi, everyone.
Welcome.
Good morning.
Okay, so good morning, everyone. Thank you for joining us today on this webinar called Doing Business in Mexico. We can see now the agenda that we're going to be discussing today. Some of the items that we're going to be touching is when should a legal entity be established in Mexico? We are going to talk about general information regarding corporate income tax, then discuss the value-added tax in Mexico, as well as labor matters that are important to consider in Mexico, as well as other bank matters. And to finalize, we're going to review different tax matters that are applicable in Mexico, and we're going to see some recommendations. Okay, so let's get started with the first item of the agenda. When should a legal entity be established? So there are a couple of ways on which a foreign company located in any part of the world can start doing business in Mexico, several ways, without the need of creating what is called a permanent establishment. For once, there can be the case on which the foreign entity is having transactions with Mexican clients on which the transfer of the property takes place abroad, and then it is the Mexican client that is in charge of performing the importations of the good and is the importer of record for the importation. This doesn't create a permanent establishment for the foreign entity, so it is one of the most common ways on which the entities start transacting with Mexico. There are certain activities that can be performed by a foreign resident within Mexican territory, and this is to promote the products or perform what is called activities that can be considered as preparatory or auxiliary within a whole process. So this doesn't, in fact, create a permanent establishment. However, once you are in one of these two scenarios, it is important to be advised by a tax professional that can guide you through whether or not you can fall on a permanent establishment, and especially go case by case and review the activities that are going to be performed in a specific with each company to make sure that you're not falling already into a permanent establishment. Another situation that can trigger a permanent establishment is employees. Employees or having the need to contract an employee in Mexico that's going to be hired by the foreign entity, that may create a permanent establishment, as it will create a working relationship between the individual and the foreign resident, and as such, the company is obligated to register for Social Securities to cover for the employee and register as an employer. Therefore, at this point, it does create a permanent establishment risk that needs to be evaluated. So when should a company be established in Mexico, or when can you go ahead and start an incorporation of a new entity? Well, in addition to the other items that we just mentioned, some companies also start transacting in Mexico through distributors or agents, meaning that they buy the products, such as the first scenario that we discussed, from the foreign resident abroad, and they deal with the importation and they sell to local customers in Mexico because they are already a Mexican entity with establishment is in Mexico. But as a level of transactions and as the product or the service is better received in Mexico, that usually triggers the need of establishing the company, as the clients giving the amount of transactions, they might request you to have a Mexican entity and deal with you directly rather than the distributor. So this is one of the first steps as well that usually trigger the incorporation of a new co. And it is important to mention here that there is no minimum value of transactions or number for transactions per month or per year in order for you to be able to Can we go to the next? Okay.
Perfect. Thank you, Cynthia, for sharing those kind comments regarding the operations in Mexico. And it is very important to have them in mind in order to carry an analysis if the foreign companies are very interested or are interested in carrying operations here in Mexico. So once they carry basically that analysis, they can go with the further process. So the further process that I'm referring to, well, is incorporating an entity here in Mexico. So what we usually do is we can find two stages in order to incorporate fully a company here in Mexico. The first stage, we can name it as incorporation stage, which basically relates to granting a POA or a power of attorney to an individual here in Mexico for him in order to have power or legal recognition in order to set up an entity, a legal entity. Once that process is carried, we can go to a second step within that stage, which is the incorporation of the entity or establishing the bylaws of the company, in which that legal document will basically state the name of the company, the shareholders, capital that will be established, among other legal concepts. The third operation to be carried basically is the deed before the notary public in order for this document take legal purpose. And after that, a fourth stage and the last stage the last steps on that stage is to register that legal document that already passed the notary public in order to register that document in the public registry of commerce. That will be the first step, and all the legal procedures will be contemplated within this stage. Now, moving on to the second stage, once the legal procedure or the legal entity already is in place, we can find some legal steps that can be described in this slide. Well, basically, there are operations or authorizations that each entity must carry depending on the entity. For example, we have the registration before the tax authorities, which is a very important matter to have in place in order to obtain a tax ID. Here in Mexico, it is important that every entity has a tax ID in order to operate. Also, there are different activities to be carried: opening bank accounts, set up banking portals, registration or obtaining authorization with labor and state authorities, determine accounting system, invoicing system, and if the company requires, as Cynthia mentioned, we'll put in place individual employment agreements, or in such case, a collective agreement for employees, and some municipal or local authorizations. Well, regarding all this process and all these activities that were mentioned regarding the legal procedure and these startup items, we usually see that this whole process takes between 1 month and 3 months period in order to establish, since the granting of power of attorney until obtaining all the authorizations in order to start operating a company here in Mexico. Well, regarding the core business of the company, depending on how they will operate here in Mexico, in case that they will need or the company requires that such company import goods in order to operate, or have raw materials here in order to operate, or having a manufacturing activity, well, a registry of importers must be carried in order for the company to import directly the goods from abroad. One of the requirements, as mentioned before, is the tax ID. The tax ID is an essential information for the company in order to obtain this registry of importers. In case of not obtaining the registry of importers, well, companies need to attend to a third party in order for the third parties to import for them at the beginning. That may be one of the cases.
Arnold, if you allow me one comment right here,
sure.
This we're talking about is the general import license for any type of merchandise that the company is pretending to import or export out of Mexico. Let's also consider that there are other special programs such as the IMEX program, and then a VAT certification process that can also be acquired and can grant some other benefits, such as being tax exempt on those importations into Mexico.
Definitely, depending on the thank you, Cynthia. Depending on the characteristic and the needs of the company, in order to make more efficient the operation of the company, there can be an analysis regarding customs and foreign trade in order to obtain these benefits and be granted the authorization to operate and import and have these kind of things within the company. Great. So moving on to the next slide. Also, a very important thing to have in mind is the type of business that will be incorporated in Mexico. Basically, the Mexican law establishes different kind of entities to be established here in Mexico. But what we usually see here is that foreign entities or with foreign capital tend to use these two business corporations. The first one is the limited liability company, which the acronym in Spanish is Sociedad de Responsabilidad Limitada, or SRL entity, which basically assimilates to an LLC company in which partners operate a business here in Mexico. And the second kind of corporation is the corporation entity, which the acronym in Spanish is Sociedad Anónima, or SA, which is a normal entity in which the shareholders also contribute to a company in order to start operation. It is important to mention that for legal purposes in Mexico, all entities must have at least two shareholders or two partners in order to initiate operations. In case that this does not require this requirement is not filed, well, business corporations cannot be processed. This is a very important thing compared to the US, in which there are entities that are held by one shareholder or one partner.
Okay, now we're going to move on to the second part of our agenda. We're going to discuss corporate income tax in Mexico. Okay, and here we can find general information about income tax in Mexico. Corporate tax rate is 30%. It has been the same rate for the following years, and at the moment we're not expecting a change. Of course, we have to be pending of any tax reform that can occur any year at the end of the year through the legislation process, but at the moment we can consider the 30% corporate tax rate. It is also important to mention that individuals as well as companies, they have to consider a worldwide taxable income for its returns. Also, another characteristic of Mexico for income tax is that we have a monthly procedure we call monthly tax installments, and then we also have the annual tax return. However, it is important to consider that the monthly tax installments are paid on behalf of the annual tax, which usually will help that the annual tax return is not such a significant number, and in case there has been an overpayment through the monthly tax installments that can be considered as a balance in favor that can later on be credited towards other payable taxes or be requested in refund. Another characteristic in Mexico is that for those monthly tax installments, companies have to calculate a profit ratio. This is based on prior year's tax profit and taxable income, and this profit ratio will be used to calculate following year monthly tax installments. Also, we can consider 3 times in order for revenue recognition. One of them is when the invoice has been issued to the customer. That will be the first moment for consider that as taxable income. Another scenario is when the service has been provided or the goods have been delivered to the customer. That will trigger having to declare those income, and also when the collection has been partially or fully paid for those invoices, for those services. Those are whichever of these 3 that occurs the first will trigger the moment of considering taxable income. Also, as for authorized deductions, the authority has labeled some of specific deductions. Each one of these has its very own characteristics. For example, we have the cost of sales, which can only be considered after the goods have been sold. For depreciation of assets, we have a specific tax depreciation rates depending on the type of the asset, and we are allowed to consider an inflation factor on that depreciation. And as for foreign or intercompany charges, such as royalty, interest, management fees, etc., the authority has added requirements such as they have to be paid so that they can be deductible. The prices need to be within arm's length, and also a special invoice that needs to be received so these items can be deductible. So all of this is some of the general aspects of income tax in Mexico. If we can move to the next, please.
If I may, Cynthia, and I just want to share some highlight comments regarding the income tax. Well, some important things to have in mind is that the fiscal year here in Mexico relies as a calendar year. So this may differ to the foreign companies or to the shareholders of the company. For Mexico, well, it is January 1st until December 31st. That's the fiscal year here in Mexico, and well, it's basically the only calendar year that or fiscal year that we can have. And also the annual tax return, the moment of filing or submitting such obligation, well, must be carried within the three following months in which the fiscal year ends. And the monthly installments that you were kindly to share comments, well, those filings must be carried no later than the 17th of the following month in order to be submitted to the tax authorities. And we have also in the income tax, well, the tax losses. Well, here in Mexico, those tax losses can be used against taxable profits, and they have a period of expiration up to 10 years, and that tax loss can be used entirely on the tax profit for income tax purposes.
Thank you very much, Arnold, for those accurate comments. And then moving on, also, as we were mentioning, every year Mexico goes through a legislation process on which it is reviewed if any modification to the current laws are going to be performed. And as part of that, through the last couple of years, Mexico has been incorporating into its local legislation some adoption of the BPS actions. So in order to recognize that within our domestic law. some of these changes that we have seen in the past couple of years is that we have a greater scope or definition for what can be called a permanent establishment. So we need to, there used to be a sort of gray area there, but now with this clarification, it seems to be more clear. Also, the tax authority has been adding limitations on crediting the income tax that the company pays abroad in another countries. They usually included a limitation as well on the deduction of interest expense that is charged within intercompany group for companies that have over 20 million pesos of interest expense. There are certain rules for deducting that. They also added a chapter for digital economy for all those platforms that are somehow providing service in Mexico or to Mexican clients that is regulated nowadays. And they are also establishing regulations for what is called hybrid mechanisms, which is the case on which Mexico might consider some expense in one category, in another country that can be considered under a different category and being taxed differently or not taxed at all. So this is what is called hybrid mechanism. Being different on the two countries. They have added regulations about it. And also one of the newest addition to our domestic law is reportable schemes or reportable transactions. Basically, the authority identify a list of 14 items that when they generate a benefit to the Mexican taxpayer, they have to be reported either by the taxpayer or by the tax advisor and explain how that transaction was performed, what is the benefit that is being received by the authority and by the company, and the authority is going to classify each one of these schemes or transactions individually. So basically, this is new reporting that either taxpayer or tax advisors have to perform as well. Okay, and then we're going to talk a little bit about dividend distribution in Mexico. As you know, the dividends, they can be granted to the shareholders once the company has generated financial profits, and also when those profits have paid taxes already and they come out of the net profit account, they're usually tax-free. However, since 2014, the authority added an additional 10% withholding rate to dividends that are paid by Mexican entities to Mexican individuals or to foreign shareholders, meaning that in some cases, this additional 10% rate can be added to the, or can be withheld to the dividends that are paid to the shareholders. However, it is important to review the country of tax residency of the beneficiary of said dividends, because tax treaties usually provide an exemption or a reduced tax rate to this additional 10% withholding rate. Of course, this is applicable only to the profits generated after 2014. So for companies that have been operating before 2014, they need to have two separate controls for the profits prior 2014 and after 2014.
And I think it is also very important to mention, Cynthia, that Mexico, well, has a lot of double tax treaties celebrated with a lot of countries. Actually, for Latin American, compared to Latin American countries, Mexico has around 60 treaties celebrated with countries all around the world. So this is a benefit that Mexico grants or has for the foreign capital that invests here in Mexico. And also, I think it is important to mention that depending on the tax residence of the shareholders, well, a further analysis can be made in order to see if this percent, in case it applies, depending on the treaty, such withholding may be credited in the foreign company or the shareholder in this case. So I think it is important to mention and have that fact in mind. Perfect. Thank you. And moving to the second most important tax here in Mexico, well, we have the value-added tax. As Cynthia mentioned, the income tax, share her comments. Well, I'm going to talk about a little bit of the value-added tax here in Mexico, which is an indirect tax for financial purposes and for tax purposes, which it will not impact or it is calculated directly on tax profit. In general terms, the VAT is calculated on cash flow basis. There may be some exemptions, and the VAT standard rate here in Mexico is of 16%. Then there are some particular cases in which we can find a reduced rate for VAT, in which it can go from 8%, 0%, and exempt. Regarding this, the value-added tax compared to the income tax is calculated on monthly basis. So compared to the income tax, we have the annual tax return that we were talking about before. For value-added tax is on monthly basis, in which we call them period, and this obligation must be submitted no later than the 17th of the following month in order to be filed to the tax authorities. Also, calculate the methodology or to calculate the VAT, well, is different than the income tax also, in which in this case we have a cash flow basis compared to what Cynthia was explaining us before, in which we have different times in order to recognize the income tax, depending on cash flow, invoicing, delivering goods, or rendering services. Well, basically, the value-added tax is kind of very straightforward regarding cash flow, and some minimal differences in order not to calculate it through cash flow. Well, basically, the value-added tax contemplates different operations to be taxable. For starters, we have the alienation of goods, in which a company normally will sell a product, right? So we have at first the alienation of goods. Also, we have the temporarily use or enjoyments of goods, in which is very common for companies that come to Mexico and establish a company here in order to have a temporary use of a good. And the third one, we have rendering services, which is also subject to VAT. And in the particular case that we wanted to share with you is that recently in 2020, since January 1st, 2020, well, the value-added tax contemplates additional articles in its law regarding digital service by residents abroad that carry products here in Mexico. And also the importation of goods is also subject to VAT. It is important to mention that compared also another topic to be compared with the income tax law is that value-added tax, it is considered a territorial tax. So basically all the operations that are carried here in Mexico or within Mexican territory are subject to value-added tax. So operations that are carried by Mexican residents abroad, in which they may render a service abroad or sell a good that is delivered abroad, well, these kind of operations, depending on some conditions, cannot be subject or may not be subject to VAT. I think that is one important thing to have in mind compared to the income tax, which is on a worldwide income basis. So in general terms, we want to share with you regarding the calculation or the mechanism in order to calculate the value-added tax, which is also very straightforward, is basically the comparison regarding the charge VAT to the clients compared to the VAT paid to the suppliers, depending on which is higher will determine if it's a payable VAT to the tax authorities, or the company will have a favorable balance on VAT. In case that the companies charge more than what they pay, well, we have a VAT to be paid. In case that we paid more than we charge, well, we have a balance in favor. And also, as mentioned before, the VAT, well, is an indirect tax, so this will not impact the P&L for business purposes, and all the movements will be registered on the balance. And in case that the company has balance in favor, well, we have different methods to recover or to apply that tax benefit or that tax attribute. The first one is credit against the following VAT in charge that the company may carry or may obtain in the following months, and the refund, which basically the companies can request the tax authorities for the refund of the VAT in favor. There might be some specific rule regarding offset in which they can go backwards and offset the VAT in charge, depending on some conditions are met.
Okay, on this part, I would like to add that the recovery of balances in favor, as you mentioned, either through credit or refund, the company has 5 years period to act on those. Now we're going to talk about labor issues as well as bank institution matters. Okay, so one of the main characteristics of Mexico is that companies are obligated to distribute 10% of its tax profit to the employees that provided service during the prior year. This 10% used to be unlimited, meaning that if the profits of the company were significant or very high, the profit sharing will continue to increase same as the amount of profits of the company. However, you've probably heard that Mexico has finalized a labor reform. This was finalized just April 23rd this year, and one of the changes on this reform is to put a cap on the profit sharing that is going to be paid to the employees. The reform contemplates two caps, one of them that is pretended to benefit the employees and the other to benefit the company. These two caps, whichever is more favorable to the employee, is the one that's going to be applied. So in a way, profit sharing, of course, continues to be beneficial to the employee, but at least there can be a cap so the company also can be certain about it. The two caps that have been approved is profit sharing for each individual employee can be up to 3 months or 90 days of salary. This is one of the caps. And then the other is the average profit sharing that they have been distributed during the prior 3 years. So once the company is doing the calculation of profit sharing, you have to consider these two scenarios. Whichever is greater, it's going to be paid to the employees. The regulations specify that it is paid during May of the following year. We're saying it corresponds to 10% of the tax profit. However, there is a slight differences that we can take out from that tax base when considering the 10%. Another important factor to consider in Mexico is the labor unions, because they're also very aware of companies' results, and could be the case that if profit sharing is not what they need or what they want, they might request additional that can be paid sort of a bonus, but that is to be discussed with each individual labor union that the company has. We're going to talk about a little bit insourcing and outsourcing. I mentioned this very new labor reform that Mexico just went through. And the objective is to improve labor condition for Mexican workers and increase tax revenue for the companies that are hiring the employees. One of the main items of this reform is that labor subcontracting, as we know it, is forbidden. For many years, we have seen what we call outsourcing, which means subcontracting from a third party, and the insourcing company, which is subcontracting from a related party company. So basically, with this reform, putting employees at the disposition or at the service of another company, and that they are providing services that can be considered within the core business of the receiving entity, this situation is forbidden. They leave a small area of possibility for having subcontracting, and that is when the services performed can be considered as specialized services, and very specific regulations about specialized services also have been put in place. And those specialized activities are those that are not the main business of the company, meaning that you cannot subcontract your whole workforce, and only very specific activities that require a special training and equipment. Also, there's going to be a list of authorized special service provider, and this authorization is going to be granted by the Department of Labor, and it involves also having every form or compliance of the providing entity to the client that's paying for the subcontracting specialized services. What the exposures of having subcontraction or specialized services is that there is no income tax deduction for those expenses. The VAT that we just talked about that has to be paid for suppliers, it cannot be credited, and also it is implied a tax fraud that can be penalized with jail. So basically, with this reform, we are seeing that service providing companies or subcontracting companies are disappearing and only leaving a very small space for specialized service. So this is something important to consider when you are considering doing business in Mexico.
Also, as you mentioned, Cynthia, regarding profit sharing and this reform, labor reform that just happened a couple of months ago. Well, regarding the profit sharing, I think it is very important to let the audience know that the profit sharing that is paid to the employees, well, it can be credited to the taxable profits generated in the following year, or in the year that those profit sharing is paid to the employee. So this may impact beneficially to the companies for the future.
Yes, it does serve as a tax deduction when it has been paid. Okay, then we discuss subcontracting and profit sharing. Another important factor regarding employment in Mexico is social securities and other payroll taxes. In Mexico, we have a social security institution that is also the one in charge to provide insurance and social care for the employees and their families. So it involves a monthly payment to this institution that includes several branches or several categories of this tax. For example, we have housing tax or housing fund, which is employer contribution, 5% of employees' earnings, and this will allow employees to later on get a credit for acquiring their own house. Then we have the work risk premium, which can go from 0.5% up to 15% premium. And this is specific to the activities that are performed by each company. The activities are classified depending on the risk, and then the rate is established. Also, if the company has a history of very low risk within the facilities and to its employees, this work risk can be reduced in following years. We have as well pension or retirement fund, 6.2% of the employees' earnings. This is also employer contribution for the retirement of the employees. Also, in general or in average, the cost for health or social security in Mexico is around 27%. That can be considered labor cost. And then most of the states in Mexico have a local estate tax that can go from 1.5 up to 3.5% as well, based on employees' earning, and the rate will vary depending which state the company is located. Okay, and the final item on this subject is bank institutions. An important item setting up a Mexican entity is deciding which is the bank that's going to be used for the Mexican operations. Nowadays, we have a global financial system in Mexico with important banks such as Citibanamex, BBVA, HSBC, Scotiabank, etc. Some of them are very friendly for foreign entities. Some of them even have an English platform, so that is something to be considered when a foreign company comes to Mexico. And also another factor to consider is to identify the banks, as there might be some that may apply more requirements to the opening of a bank account, and some others that can be renowned for being more efficient on the process and require less documentation.
Thank you, Cynthia. And moving on to the last part of the agenda, well, we have different tax matters in order for you to have a little bit more perspective on the tax situation here in Mexico. Yeah, well, basically, what we want to share here to you is that Mexican tax authorities has been making a huge investment regarding electronic measures in the last decade, in the last 10 years, in which they try to oversee and well, not control, but can have an overview of the operation of the taxpayers and the operations with other parties. So one of the main topics here that we want to share is the electronic invoice, or the CFDI as we call it, that we can also find a synonym as a digital tax receipt. This was an obligation that was incorporated to our tax code since 2014, which all taxpayers must be subject to. All the operations regarding a company of buying and selling, well, a Mexican entity of selling goods, well, they must issue a CFDI or a digital tax receipt. And also for VAT controls, a complementary or a complement of that CFDI must be issued in order for the tax authorities to see the cash flow and also have their control regarding the VAT balance in favor and the balance and the VAT charge that taxpayers must pay. Every product or every service that will be rendered has a specific ID that must be contemplated on that CFDI. And well, there's some kind of process regarding CFDI cancellation that must be carried through the tax authority website, in which the supplier may request the client to cancel a CFDI, and in the same tax authority website, the customer or the client may accept that cancellation in this platform. And also there are some additional electronic invoices that may be carried, not just regarding operation. Well, we have CFDIs or electronic invoice regarding payments that are made abroad, payroll receipts to the employees, merchandise transfer, also regarding exportation operation, among others. These basically are the main electronic invoices that we can see in a normal operation of a Mexican company. And also there's this electronic accounting that was also implemented here in Mexico. Well, basically this is a mechanism of the tax authority, well, to overview or oversight the situation of the companies. Well, they will have access to the numbers of the company, right? So this must be filed through an XML format file to the tax authority in the website. And basically the electronic accounting mainly consists of, well, trial balance that must be filed on monthly basis. Also the chart of accounts that a company uses, well, this must be filed at the beginning of this obligation or of incorporation, and every time that this chart of account is modified, also they must be filed again to the tax authority. Electronic journal entries must be may be subject to or required by the tax authorities at any moment. So this is something important that we recommend to keep updated for the company. And there is also an annual filing return, which considers special accounts. Basically, these special accounts are determined on annual basis, such as tax losses, tax attributes, or tax benefits that the company has, and this must be filed on annual basis once the fiscal year is over. So also we have the general anti-abuse rule, or a Mexican GAR rule here in Mexico, that was introduced in last year, January 1st of 2020 was enforced. And the main objective of this rule is to detect all the operation or acts that a taxpayer or a Mexican taxpayer carries, in which they obtain a direct or indirectly tax benefit in the company. And basically what the tax authority will look is that if the operation has or lacks of business reason. And the main definition of this business reason for the tax authority and how it is established in our tax code, well, basically is that if the economically operation or benefit is lower than the tax benefit, well, basically it is an operation that lacks business reason, and the tax authority may determine that such operation is non-deductible for income tax purposes, not creditable for VAT purposes, and the company may be subject to a penalty. Also, we have dissimulated transactions or non-existent transactions. What basically the tax authority will look at is the service or the product that is being rendered or product that is being sold to the clients, and depending on the assets, personnel, infrastructure, or material resources of the company, if it doesn't make sense of the operation that the company is carrying, and they do not have the attributes that we just mentioned in order to carry that operation forward, well, the tax authority may say that that operation or that transaction is simulated, and we will have the same effects as I mentioned before: non-deductible operation, not creditable VAT, and of course a penalty regarding that operation. Thank you. And we have also, as Cynthia mentioned before, well, regarding intercompany transactions operations here in Mexico, well, we have transfer pricing policies here in Mexico also established, in which the tax authority wants to know if such operations are agreed on arm's length basis, right? So this transfer pricing study becomes an obligation to the Mexican companies if the income or revenue is greater than 13 million pesos on entrepreneurial activities or 3 million on rendering services. It is important to mention that the information that is stated in this transfer pricing study, well, it will also serve as information for another tax return, such as multiple information return, also the audited financial statements, and the information about the tax status report. So it is important to keep that in mind, and in case that the company is obligated to carry this, well, is information that the company will require for further obligations to be filed or submitted. Moving on to the next slide, also regarding transfer pricing studies, well, we have, or Mexico introduced or tried to apply the Action 13 of the BEPS or OECD model regarding transfer pricing information, right? So depending on the operation, as mentioned before, of the Mexican entity, well, there are 3 new obligations that a Mexican company may be subject to. Well, we have the first one, local file and master, the second one, master file, and the third one, country by country. The first 2 are obligated to be submitted if the revenue is higher than 842 million pesos within a year, in which the first one, basically what must be disclosed is the baseline pricing model structure for local activities. The master file must disclose organizational structure, activities, intangibles, financial and tax position. And the country by country, well, on a consolidated group revenue must be greater than 12 million pesos. In Spanish, 12 mil millones. In the description or the information that tells, well, is greater than the 2 previous, in which it must disclose the multinational structure, restructuring activities, intangible assets, and transfer pricing policies, among other things.
Okay, now we reached to the last part of our presentation today. We're going to discuss some conclusions that we recommend for you. So as we talked about specific considerations for setting up a company in Mexico, we definitely, as mentioned at the beginning, recommend to have an analysis of the operations to be performed, the initial structure. We recommend to have the advisor of a special legal and tax team to evaluate what is the perspective in Mexico, also to evaluate the effects that the company can have at the corporate level, especially when dealing with multi-country companies, and the compliance with the best BEPS recommendations as well. It is also important to consider the labor obligations in Mexico. We discussed profit sharing. We also talked about employees. They mostly need to be hired directly by the operating company, with the exception of specialized services. So that is very important to consider when evaluating Mexico as an option.
And also another 2 recommendations that we try to share with you, well, is the designation of bank accounts, as Cynthia mentioned before in one of these slides. Taking in consideration and evaluating the correct bank account will make up or ease the operation of the companies for Mexican purposes, or for Mexican operations and for abroad operations. So there may be some different requirements between each bank. So it is an important analysis to carry. And also the use of the accounting system or local, if a local is being introduced or adapted in order to be harmonized with the foreign entities and can be consolidated further on with the financial statements of the international group. So this is a very important analysis to be carried also for each company.
This was the final part of our presentation. Here you can have our contact information. Thank you for joining us up to this moment. And I'm going back to Alejandra in case there were any questions by the audience.
Thank you very much, Cynthia and Arnoldo. And I hope everyone just enjoyed this presentation. I know that it's very important to understand how to open or what is the considerations to have an entity in Mexico. So please feel free to contact Cynthia or Arnoldo and myself, and we'll be happy to help you with any other questions, very fleur with your company. So right now at the moment, I know that we have very few time left. So I would like just to go quickly to the Q&A session because we did receive a couple of questions, but I'm going to have to only choose two. So let me go ahead and just review them quickly and see which ones I can ask right now. Give me 1 second. Here we go. Alrighty. So this one, it says here, what is the difference between the type of business corporation from a legal and a tax perspective? I believe this one you can answer, Arnoldo.
Yeah, I think I can take that one regarding the difference between the legal entities. Well, basically, for tax purposes, is basically the same. There might be a slightly different, slightly difference between some tax consideration. Nothing important, but for legal perspective, well, I think the major difference is the exposure or the limitations regarding shareholders and liability that they have of the Mexican company. I think that's the main difference is on a legal perspective.
Alrighty, thank you so much, Arnoldo. Hopefully that provided clarity to the person in the audience. And one more, since we need to go. So let's see here. Does a Mexican company need to hire employees directly, or is there a way around it? Who can take that one?
I can answer that, Ale.
Thank you.
Yeah, basically, as we were discussing with the newest labor reform, the employees that provide the core business activity of the entity, those need to be hired directly, and there's no way around it. As the question mentioned, there is a small window for specialized services for those providers that get the authorization for the labor authority and do not perform the core activity and also get comply with the every 4-month compliance that has been established. So as a summary, yes, pretty much all of the employees need to be hired directly with very few exceptions.
Excellent. Well, thank you so much for your answer, Cynthia. I mean, at the end of the day, the labor reform did come in, and it's very crucial. So yes, that was a really good question. Alrighty, well, basically we are at the end of the webinar. Hopefully everyone had a very interesting time with us today. Thank you so much. Jay Del Rio appreciates your interest and remains at your disposal for any further questions. Thank you so much, and hopefully you have all a great day today. Bye-bye.
Thank you everyone for joining us. Bye-bye.
Thank you.